Good morning, everyone. My name is David Park. I'm a vice president in the bank's legal department and a member of the bank's internal senior diversity advisory board. On behalf of the Federal Reserve Bank of Boston and in place of Marquise Benton, vice president and director of the bank's Office of Diversity and Inclusion and OMWI, I want to extend a warm welcome to all of you to the Capital and Minority Business Capacity Building Conference, sponsored by the Greater New England Minority Supplier Development Council. Marquise could not be here today since he's attending the inaugural meeting of the Federal Reserve at the Federal Reserve Board of Governors of the directors of the newly established Office of Minority and Women Inclusion of all the Federal Reserve banks. We are very fortunate to have a very distinguished group of speakers, panelists, and participants today. I'm pleased to introduce two opening speakers, Lynn Brown and David Hinson. Lynn Brown is an executive vice president at the Federal Reserve Bank of Boston. She's responsible for the bank's regional and community outreach, public information and employee communication, as well as its community development and economic education activities. An economist, Dr. Brown was the bank's director of research from 1993 to 2001 and was responsible for the bank's scholarly research and monetary policy analysis. Her personal research has emphasized economic developments in New England. Dr. Brown co-authored the bank's influential 1992 study of discrimination in mortgage lending. She received a bachelor's degree in economics from the University of Western Ontario and a doctorate in economics at MIT. As the National Director of the Minority Business Development Agency, David Hinson oversees 5 regional offices and a network of 48 minority business centers, providing services to promote growth and competitiveness of minority businesses. The overall mission of MBDA is to achieve economic parity for the minority business community. Mr. Hinson is uniquely qualified to lead Minority Business Development Agency. Prior to joining the agency, Mr. Hinson was president and CEO of Wealth Management Network, a multi-million-dollar independent financial advisory firm. Prior to starting Wealth Management Network, Mr. Hinson managed a 10-state sales region as Director of Advisory Services for InvestNet Asset Management, a $70 billion financial advisory firm. In addition, Mr. Hinson previously held a variety of senior-level positions at Bank of America, Morgan Stanley and Company, First Chicago, which is now J.P. Morgan Chase, and the Village Foundation. Mr. Hinson received an MBA in finance from the University of Pennsylvania Wharton School and a bachelor's degree in insurance and finance with honors from Howard University in Washington, D.C. Mr. Hinson is a member of a number of civic organizations, including the Council of Urban Professionals in New York. In addition, he has provided financial commentary for CNN, Fox News Channel, and CBS News, and has written financial columns for the Network Journal, Black Enterprise Magazine, and Essence Magazine. At this time, I also want to acknowledge Dr. Fred McKinney, President of the Greater New England Minority Supply Development Council, for his hard work in organizing this conference. Please join me in welcoming Lynn Brown and David Hinson. First, Lynn.
Well, it's a great pleasure to have the opportunity to kick off this meeting, and I'm delighted to see that we really do have a full house. So I'm very, very pleased to be participating in this program. I'm going to do a couple of things today. First, I'm going to try and give you a very quick overview of economic conditions nationally and in New England. Then, if time permits, I'm going to say a few words about some of the Boston Fed's activities in the city of Springfield, Massachusetts, and particularly some findings from recent research on Latino entrepreneurs in Springfield. But first, sort of what's going on nationally. It's actually been quite a while, June 2009, since the end of what is now being called the Great Recession. It's called the Great Recession because the drop in output and the increase in unemployment were greater than in any other recession of the post-World War II period. And also the duration was longer. But although sort of the recession is officially deemed to have ended in June 2009, we still have an unemployment rate of 9%, and sort of the recovery has been painfully slow, as I'm sure many of you are aware. Fortunately, though, there are some signs that the recovery is gaining some traction, and in particular, the pace of output growth picked up in the fourth quarter of last year. Notably, consumption, which is about 70% of output, grew at a pretty vigorous rate. In particular, consumer spending, especially on motor vehicles and other consumer durables, was pretty robust. It's not really clear what went right. A lot of things sort of improved a little bit, but not really so much as to make that big a difference. For example, consumer sentiment picked up, but consumer sentiment is still pretty low, almost at recession levels. We did see the stock market improve, but housing prices were soft, so it's not clear what happened to overall wealth. A number of people basically think that the consumers just got tired of being so cautious, and in particular those who, if you look at sort of the pattern of retail sales by chain and so forth, if you look at that, people sort of think that maybe consumers that came through the recession pretty well, but who've been fairly cautious in their spending, either because they were nervous or because they didn't want to appear ostentatious, that they simply sort of opened their wallet. But in any event, there is a sense more of greater optimism now, and most forecasters have increased their forecast for 2011. The Federal Reserve is no exception. Chairman Bernanke was testifying just recently, and his testimony was accompanied by what's called the Monetary Policy Report, which contains the forecasts, doesn't attribute them to anyone in particular, but it contains the forecasts of all the Federal Open Market Committee participants, the Reserve Bank presidents, and the governors, and they are now forecasting GDP growth of 3.5% to 4% for 2001 or 2011, whereas back in November they were forecasting only 3 to 3.5%. So they're definitely saying things picking up. Unfortunately, the job situation is expected to improve only slowly, the drop in the January unemployment rate notwithstanding. Now we'll actually know, maybe there's more to it than we thought. It seems that drop in the unemployment rate was due in large part to shrinkage in the labor force, but actually we should find out. We'll have actually the February unemployment rate, I think tomorrow, or if not tomorrow, the following week. So unfortunately, we expect, though, that unemployment rates are going to remain high for quite some time. And this situation is very worrisome because such high unemployment rates persisting over literally years mean that some individuals are in danger of seeing their skills atrophy. Many young people, it is a lucky teen today that has a job. Only fewer than 30% of white teenagers have jobs. For minority teens, fewer than 20% of teens have jobs. So here, and this situation is persisting for quite some time. So you really wonder, how are young people going to gain the skills they need to compete in the workforce? Now, New England's performance in the Great Recession and the recovery has actually been somewhat stronger than nationally, although the experience of the various New England states is quite different. Rhode Island has actually fared much worse than the rest of New England and the nation. Employment fell earlier and the fall has been deeper. For a time, Rhode Island had the dubious distinction of the second or third highest unemployment rate in the nation. Now it is only fifth, which is a good thing. On the other hand, New Hampshire and Vermont have actually done relatively well, and unemployment rates there are quite low, in the 5 to 6% range. Connecticut and Maine sort of in the middle by some standard measures, a little worse by some, better by others. The interesting one is Massachusetts. Massachusetts' performance has been stronger than the nation's.
This has been sort of greeted, celebrated quite a bit, and there's almost a little bit of triumphalism at times, it seems, about Massachusetts is doing really, really well. I would say the situation is Massachusetts is doing mildly better than the nation. The general patterns of the recession have been very similar in Massachusetts to the nation, steep fall off in employment, construction has collapsed, housing prices have fallen, foreclosures have risen sharply. But it is true that the fall has not been quite as steep in Massachusetts as the nation, and the recovery has been a little more vigorous, and the unemployment rate is somewhat a little bit lower. This is all good. But what's really different is that this is such a change from the last time around. 2001, Massachusetts did much worse than the nation, and of course, some of those of you who have memories that go back that far, the early 90s, Massachusetts and the rest of the New England did much, much worse. And in both those earlier periods, Massachusetts experienced significant outmigration, net outmigration to other parts of the country. This time we are not experiencing net outmigration. And why is that? It's because the other parts of the country are not doing better than us, whereas last time they were doing much better. Indeed, some of our favored destinations for Massachusetts folks, like Florida, are actually doing quite a bit worse. Now, in the interest of time, I'll keep this very short, but I would like to just comment very briefly about findings from a recent sort of analysis of small Latino businesses in the cities of Springfield. We have been involved at the Boston Fed, have been involved for about 2.5 years now in sort of a outreach and research project in the city of Springfield, Massachusetts. The reasons why Springfield are too long, it would take me too long to get into it. Our goal is to help Springfield improve its economic performance, and in the process help basically Western Massachusetts and Connecticut, Hartford area also improve, because Springfield, despite economic problems, is the economic engine for Western Massachusetts. Even though what we bring to the table is primarily a research capability and people and an ability to convene people. People do come when we invite them often. But our president keeps saying, I want some change to actually happen. I don't want just another study. In fact, though, we actually have done another study. We've done 9 studies. They're on our public website. That's not, though, just because we can't resist doing research. It was sort of, we needed to inform ourselves about Springfield. Springfield sort of felt we've been a much studied city, and they didn't want, so not another study. The studies that have attracted the most attention have been one that have compared Springfield with 25 other mid-sized former manufacturing centers to find out, did some of them do better than Springfield, and if so, why? Indeed, we did find about 10 of the 25 had done better, and the rest had done about the same or worse. In New England, among the ones that did better were Providence, Worcester, and New Haven. We looked at them to find out what was different, what were the distinguishing features, and a distinguishing feature was collaborative leadership, that business, government officials, civic leaders all came together to promote the city and its well-being. There was also an openness and a recognition to new population, racial and ethnic groups in the cities that perhaps Springfield did not have. Springfield's current leadership has been quite receptive to this, and actually 35 business and public leaders from Springfield went to North Carolina, to Winston-Salem and Greensboro, which are also sort of among the group of improving cities, to see what they did right. And they came back all charged up, feeling that Springfield really does there's nothing really that inherently keeps Springfield back. But they also came away, one thing about Winston-Salem in particular is that business, public leaders, civic leaders all know what the vision for Winston-Salem is. They all embrace it, and they all can say where do they fit. So we felt that was a very satisfying experience. Our latest paper looks at Latino entrepreneurs in Springfield. Why Latinos? It's at least 30% of the population, and it's growing very, very rapidly. The Latino neighborhoods are the poorest neighborhoods in Springfield. So we wondered whether entrepreneurship could be a source of employment opportunities. The data show that sort of Latino small businesses are underrepresented in Springfield, given their share of the population, although not so much compared to other cities similarly. In fact, the data is probably, some of you know who work in this area, is not terribly satisfying. But what was really interesting is we did some fairly lengthy interviews with about a dozen Latino entrepreneurs in Springfield. I found this very interesting. It sort of resonated with what sort of other studies have found, but it was really very interesting. Basically, these were primarily retail businesses in Springfield. These entrepreneurs had become entrepreneurs because they wanted to be their own boss, and they had achieved sufficient success to support their families and send their children to college. However, although they wanted to be their own boss, they worked extremely long hours, and they did not want their children to follow in their own footsteps. They didn't want them to continue. None of these entrepreneurs had received any technical assistance, or even though Springfield does have a number of programs that provide such technical assistance, they all had financed their businesses, and in some cases these businesses had expanded from their own savings or family resources, so they weren't getting any sort of external from bank credit. Most of them do not belong to any business association. They provide valuable services to the community beyond the actual businesses they provide. They are involved, they provide various services like translation services, filling out documents, emergency transportation. The relations with the city of Springfield are actually okay. That was an encouraging thing, and they were pleased that crime was down. But the striking thing about these interviews was the degree to which these entrepreneurs were disconnected from the various programs that were available. And Springfield does have programs that are sort of for small business. They have a small business loan program. They have a neighborhood storefront improvement program that are clearly intended to reach this type of business. But this was clearly a revelation to us a bit that this is not a case if you sort of build it, they will come. I think the big message was we have to reach these businesses in particular, we needed to reach out. Springfield needs to reach out aggressively to approach them, and probably through Latino organizations. It was rather noteworthy that the interviews were all done by an economist who is herself a Latina, and she was talking about how, they sat down and talked, and they asked her about her family and where she came from, and sort of there was a whole very different sense than, a very strong cultural affinity, and that really mattered. So we came away this is a promising area for Springfield and other cities. It seems it has potential for job and wealth building. But any organization needs to reach out quite aggressively to these entrepreneurs. Thank you, and again, welcome.
Thank you, Lynn, for those wonderful comments. Good morning, everybody. Hope everybody's nice and warm, because I myself froze when I came here this morning from Washington, D.C. It is a pleasure to be here with you today for the Summit on Capital and Minority Business Capacity Building. This theme is the core of issues that impact nearly every business in this room. I'd like to thank my friend Dr. Fred McKinney, the advisors, the senior management team, and the staff of the New England Minority Supply Development Council for the opportunity to come here today. I'd also like to thank the Federal Reserve Bank of Boston and the many corporations who have supported this critically important summit. The state treasurers, Denise Napier, who unfortunately will not be here with us this morning because of illness, but Chip Flowers and Steve Grossman, who have been leaders in facilitating access to capital for minority-owned firms. I'd like to acknowledge Lynn Greenhall, who is Lynn here this morning? He may not be here, from the Tuck School of Business, who has a long and distinguished career in working with minority-owned firms. And Lynn and Jim Lowry just published a new book titled Minority Business Success, Refocusing on the American Dream, which is a book that I think all of us would benefit from reading. And finally, I'd like to thank all the members of the senior management teams of the minority-owned and operated firms who came here today to seek solutions on the issues that plague the minority business community. I greet you this morning on behalf of President Barack Obama and Secretary of Commerce Gary Locke, and I make speeches all over the country, and I got to tell you, I never get tired of saying I greet you on behalf of President Barack Obama. For 41 years, our goal at the Minority Business Development Agency has been to expand the U.S. economy and create new jobs through the often undervalued and underutilized minority business community. Depending on who you talk to today, the prognosis for the minority business community may be difficult and challenging, or may be a place of hope and opportunity. But when you consider the potential of minority businesses to create jobs, to participate in the current economy, and to be well positioned to participate in the future economy, which will be export-based, I can tell you that for minority-owned firms, the glass is indeed half full. The 5.8 million minority-owned and operated businesses in the United States contribute over $1 trillion of economic output to the U.S. economy. If you took this sector of the economy and separated it and called it a separate country, the minority business community would be the 17th richest nation on the face of the earth. These firms also provide over 6 million jobs directly to U.S. citizens, and through their presence create millions of additional jobs that would not be available to U.S. citizens without this business community being formed, being a part of the U.S. economy. And according to the U.S. Census, the number of workers employed at minority-owned firms, and this is the last census track, has increased 26%. And again, the track is from 2002 to 2007. That's a jump of 1.2 million workers who now find adequate employment at minority-owned and operated firms. By comparison, the growth with non-minority-owned firms, the job growth with non-minority-owned firms, was less than 1% for the same period. So we are encouraged, and we should be encouraged by the positive attributes that are occurring in the minority business community, but there are certainly still a number of issues that we have to concern ourselves with. And it should be noted that the success of the minority-owned business community, the minority business community, is really part and parcel to the success of the overall U.S. economy. If the minority business community does not realize its full potential, it is impossible for the U.S. economy to realize its full potential. And so there are two factors that we're going to discuss at this summit, this important summit. That's capital and capacity. And let me start out by talking a little bit about capital. Last year, MBDA also commissioned a study, because everybody likes studies. And our study was entitled Disparities in Capital Access Between Minority and Non-Minority Owned Firms, the Troubling Reality of Capital Limitations Faced by MBEs. And I'd like to take a moment and share some of the findings from the study, and some of these findings many of you are already aware of. Minority-owned firms are less likely to receive loans than non-minority-owned firms. And so when you look at minority-owned firms that are greater than $500,000 in gross receipts, minority-owned firms receive loans about 41% of the time. This compares to non-minority-owned firms who receive loans about 52% of the time. And when minority-owned firms receive loans, they actually have to pay more for that capital. During the analysis period, minority-owned firms were paying about 7.8% for the capital that they had, compared to non-minority-owned firms who are paying about 6.4% at the same risk level. So in other words, minority-owned firms, by virtue of their structure, by virtue of their presence, pay about 140 basis points more for capital at the same level of risk. Minority-owned firms are also likely to be denied loans more readily. And again, for minority-owned firms under $500,000 in gross revenue, these are the smaller, because we break it out between $500,000 or more and $500,000 and less. The loan denial rate was an astronomical 42%. For non-minority-owned firms of the same size, the loan denial rate was 16%. And another factor that influences capital is fear of being rejected. Among firms with gross receipts under $500,000, minority-owned firms minority entrepreneurs and operators did not apply for loans because of fear 33% of the time. That compares to non-minority-owned operators who did not apply for loans for fear of getting rejected 17% of the time. The real thing that really jumps out in our study was the issue of equity capital. Minority-owned firms receive between $3,000 and $7,000 of equity capital. Non-minority-owned firms of the exact same size and risk profile received 60+% more capital. Same risk profile, same size of company. And all these statistics reinforce what we already know, and that is minority-owned firms are challenged when it comes to capital acquisition, and the playing field is still not level. Now let's talk a little bit about capacity. The average minority-owned firm generates $178,000 in gross receipts. The average non-minority-owned firm generates about $500,000 in gross receipts. What's of particular concern are African-American-owned businesses, which generate about $71,000 on average in gross receipts, but they are the only subgroup that saw their average gross receipts drop from the most recent census tract to the prior census tract. In other words, it's the only sector that had a reduction in average gross receipts, which is a problem. And so what we have here is a dilemma. We have an issue that is part and parcel to the success of the U.S. economy that we have to address. And the Obama administration is keenly aware of the issues facing minority-owned businesses and have taken some steps to address these issues. And I'd like to share with you some of the things that our administration has done over the past couple of years to address these issues. What we focused on is making changes in the small business community, and as you know, the vast majority of minority-owned and operated businesses actually are small businesses. So one of the first things we have done since we came into office is to cut taxes 17 times for small businesses and minority-owned businesses. We have a zero capital gains rate tax for investment in small businesses. We put in place new deductions for health care for the self-employed. And we have new expense benefits which will allow companies to write off 100% of their machinery and equipment. We are putting the finishing touches on what's called the Small Business Lending Fund, which most of you are aware of, which will place $30 billion in the hands of small and community banks for lending to small and minority businesses. The Small Business Administration has dramatically increased its access to equity capital through the SBIC program. And my agency, MBDA, has increased capital and contracts for minority-owned firms by 85% since the administration took office. We are working on an interagency task force to promote government contracting for small and minority-owned businesses, and we have launched a secretarial level advisory board on minority business enterprises to provide the Secretary of Commerce and the President of the United States hardcore policy ideas to help strengthen the minority business community. I might add that this secretarial level advisory board on minority business enterprises has not been in place since 1970. This is the first time since 1970 that a board of this type has been put in place. And so, in addition, the White House recently launched, as many of you know, Startup America, which is a new program to try to create greater capacity of entrepreneurialism in high-growth industries to create jobs and to spur greater innovation. On the international side, which is critical to our economy, the Department of Commerce is doubling the number of trade missions that they lead, and we would encourage all of you to join us in participating in these trade missions. Through the International Trade Administration, we are opening up more opportunities for minority-owned firms to gain the skills necessary and the relationships necessary to globalize their business models. And unique to our structure, through our 46 business development centers, we are actually training minority operators to actually take their business models abroad. So these are some of the things that the administration has done. I could go on and on about the activities that we've been engaged in to support the growth of minority-owned businesses and small businesses, but this just gives you a thumbnail of what we've done. But what else can be done is the question that we have to ask ourselves here today. As we go through and we work through the questions of the summit, what else can be done should be something that should be in the forefront of your mind. And so I'd like to conclude my comments with giving you 3 suggestions that I have to try to create a better operating environment for the minority business community. The first one is to really rethink our growth strategies and really commit ourselves to growing more aggressively. Most minority-owned firms grow organically, one contract at a time, one economic opportunity at a time. What we need to do is embrace really the growth strategies of the future, that is growing through merger and acquisition, joint venture, and strategic partnership. But to do that, we really need to think about and reevaluate how we look at equity ownership. For many minority-owned firms, the issue of equity is an all-or-nothing proposition. Consequently, many of these firms and the managers of these firms have an attitude that they rather have 100% of something small than 50% of something large. We as a group need to come together and really work to figure out how we can change that mentality. That will be critical to the future growth of the minority business community. My second suggestion is that we really in earnest think about how we're going to globalize our business models. Most of you are aware that 95% of all consumers live outside the United States. And the Made in America brand is still very, very powerful. And so we have to take advantage of our position within the global economy, take advantage of the favorable view of American manufactured products, and really think about how we can take our businesses abroad. Many people believe that the playing field particularly for minority-owned businesses abroad is much more level than it may be here. Minority-owned firms have unique competitive advantages in the global capital markets, and so we have to take advantage of those opportunities. And finally, I think my suggestion is that the corporations that are here today, really think about how you can be better partners to the minority business community. One of the things that comes to mind is that large corporations need to really think how they actually manage their supply chain and be more aggressive in buying goods and services from minority-owned firms, particularly in the area of professional services. It is critical that minority-owned firms have the opportunity to actually lead, manage, and co-manage large equity and debt offerings. That is critical. These firms have the capabilities, they have the backgrounds, they have the experience, and so we need to rethink how we open up professional service opportunities for the minority business community. These firms also need to help firms understand better how to get minority-owned firms into the global supply chain. There's a tremendous opportunity to work with minority businesses within the global supply chains of corporations, and that's something we need to think about doing and creating greater avenues for that opportunity. Corporations need to focus on creating greater vehicles for the operators to have direct